This stuck in the mud, frustrating, directionless, no movement market, and whether your money has any real chance of getting anything going over the next few months. Let's ask Liz Young, SoFi's head of investment strategy, here with us at Post 9, right? I mean, it is kind of that kind of market. It's like stuck in the mud, directionless, no move. It's frustrating.
Yeah, well, today was unremarkable, obviously, but from November 30th until today, I think there has been a bit of a tide shift. And what we've seen multiple times this year, this could be the third time, is an attempt to try to break above some of those resistance levels. We have failed at it yet again. Now, it's still too early to say whether or not we could actually do it, but there's a couple different things that I would look at. The last time I was here on Overtime, I talked about the VIX never being able to get below 20 or even stay there. It happened again. We dipped below 20. Now we've popped back above again, and we've got a market that's down. And some of the patterns that you see under the surface of the market, the sector performance, very much more recessionary patterns, not rate patterns.
Sentiment's all about recession, right? From CEOs at these conferences all week, the CNBC All-America survey. We could show you some of these souring sentiment, as we're calling it, from CEOs, give you an idea of what we're talking about, because it's almost daily now that you're hearing from CEOs, Jamie Dimon and David Solomon, Goldman Sachs. I mean, on and on and on and on, right? It's becoming the dominant narrative.
Yeah. Well, it's about time, right? I mean, we've been waiting for earnings to come down. We've been waiting for CEOs to acknowledge the fact that a recession is more likely than not. And here we are. We're acknowledging it.
And you think one still is?
I think one is absolutely likely. In fact, I'm getting to the point where it's hard for me to understand how we wouldn't have one.
Oh, really?
We've got a lot of indicators pointing in that direction. We've got a market with all these curve inversions, which is going to keep upside limits on equities. It's hard for me to see how we wouldn't have one, but I think it would be a good thing if we just got it over with.
What's the most concerning sign to you that's telling you about that recession thing? Is it the inverted yield curve? Is it crude now the lowest level in a year? I mean, it's like pick your sign at this point, because it feels like each day there's a new development that says, aha, I got to watch out for that.
Right. Well, it's pretty classic recession signals at this point. We've got PMIs in contraction. We've got, like you said, oil coming back down. And as many of us know, you usually see a spike in oil prices before a recession and then a relaxation afterwards. I think something that's really interesting is that we've got speculation that China might relax its restrictions, yet oil continued to come down. So China can't save us from that. And there's this expectation that demand is finally going to get hit. The last things to crack are always the labor market and some of that consumer spending. So some of that hasn't cracked yet, but we're on our way. And the market will likely sniff that out before the economy actually shows it. I would also say when you finally see a crack in the labor market, and that's usually been sort of what we hang our hats on. Well, labor's still strong. Everything's going to be fine. We can have a soft landing because
it's a
people
lag,
have jobs.
right? It's a lag.
Right. It's a lag, but when it breaks hard. So that could be coming closer to the end of the year or early next year.
I'm thinking of the one person who might be able to save us. You know who that person is, right? Jay Powell. Well, Santa. I mean, Santa can't even beat up the Grinch right now. It's the Grinch is getting all the eating right now. But Jay Powell can. I mean, if the CPI is good next week, maybe he saves the day.
I don't think so. Because if you're suggesting that him saving us would be a pause, a pivot, a downshift, something dovish, that would be the wrong move at this point. I mean, we would still have CPI above 7%. He's backed into a corner. We have wage growth that accelerated higher than expectations. We heard about that last week. That was not good news. So then you've got this fear of a wage price spiral that is still here hanging over our heads. He can't pause. He definitely can't pivot. I don't think he can pause yet either. So that's where I get to the point where it's difficult for me to not see a recession in this scenario.